Good afternoon, everybody. Welcome to CRL. It's Chart Request Live, the show where you provide the tickers, we provide the charts. What's up? I'm Spencer. I'm here with JC Peretz. JC, how we doing?
Oh, I am doing fantastic, Spencer. Nice little market correction in August. It's almost like we've seen it before. I remember moving to California. I remember it well, August of 2015. And market was going through a nice little August correction then as well as I was traveling to the West Coast. It was a 2-year plan, and I lived there for 5. California is awesome.
What's correction? 10%, right?
Oh, that's bullshit, Spencer. Corrections are when the majority of stocks are not able to progress higher and have a higher highs, and these corrections could be a number of different ways. And remember, all big moves start with small moves, but not all small moves turn into big moves.
There has to be a way to define correction on index level. That's for another day, though. This is Chart Request Live. If you don't know what the deal is, if you have a question about a ticker, a stock, an ETF, drop it in the chat. We'll do our best to take a look. If you want to cut the line in the chat, even better, email me. It's on the screen, questions@stockmarketmedia.com. I have compiled all the requests we've gotten in our inbox going back to last Thursday since our last show, and I have them here. So let's start with this request from BN Cruz. That's his name. And he asked for a Marathon Oil. MRO is the ticker. Specifically, the 10-year base is what he's asking about. Do you see what he sees?
So this is MRO, and I am seeing a bigger than a 10-year base. We're looking at a 15-year base here, Baba Louie. 15-year base. But nice catch there. I think you're underselling the base, though. Underselling the base. No progress for quite some time here. And for you MRO aficionados, this is an explorer and producer based out of Houston, 16 billion market cap, which I got to tell you is really that sweet spot, I think, for this next leg higher in the market once this digestion of historic gains in this bull market concludes. I don't know how long that's going to take. Let's see how energy is really held in great over the last 6 weeks on an equally weighted basis of 14% in the second half of the year. We're halfway through the third quarter, so just this quarter alone, 14%. That's a nice move. So let's see how long it can continue to withstand that while the rest of the market corrects. Sorry, guys, blowing up over here. So anyway, Here's the big base. In the short term, I still think it's a little bit messy, right? So why don't we zoom in a little bit here, Spencer? What we like to do here in technical analysis is that we like to incorporate multiple time horizons. Not a lot of disciplines allow for that sort of thing where you can start with a long-term look and then you work your way shorter term, which is what we have here. So let's clean this up a little bit. So here we're looking at MRO. And then we can get potentially back up to these former highs in the low 40s, right? But let's remember that short term, we're still like in this mess, right? I mean, it's been a strong way to get here, right? But it's still got work to do. But I do want to point out Marathon Petroleum. So this is MPC. So this is a different company altogether. This is 60 billion. And this is on the refining side. So you can see what the difference. So don't confuse the marathons here. One is MRO, which is Marathon Oil. And look at that struggling. This is an explorer and producer. Whoops. Sorry, guys. This is an explorer and producer, MRO. And MPC is the refining company. The refiners are really showing a lot more strength. Oil services in general continue to see the relative strength in the oil and gas space. So that's where my attention would be. The other marathon.
All right. This next one is right on the cusp of what JC cares about. The ticker is CEPU. It's a Central American utility company.
$2 billion Argentinian utilities.
Or South American, sorry. You have 2 billion? I have 1 billion.
$2 billion market cap.
Oh,
Central Puerto. Central Puerto is what it would be. So CEPU.
I have it being actually, I have My data source says a little bit less than $1 billion, but all right, $2 billion.
So this is CEPU. So PU is definitely something that comes to mind for sure there.
Oh, come on. It looks like it wants to fill that gap. Let's go.
Does it?
I don't know. It did a few weeks ago.
Yeah, I mean, listen, sure. Fill this gap. It can fill this gap here. Hasn't quite gotten there. It could fill in this gap here. Just got there and failed. This is tough living. This is tough living, I think. You got that base, you got the breakout. You're looking at a small cap utility stock in South America. It doesn't have a lot of things going for it, right? You got South America, you got utilities. None of these have been good things, right?
Yeah.
So this is just stuck below this. There's, you had a lot of support here that broke. I don't know what happened here that all hell broke loose. You had a massive gap down. God knows what kind of scam they got cooking down there in Argentina with this random utility stock. But clearly the market didn't like it.
Wait, what time of the year was that? Was that like in the fall?
This was in August of 19. So is that when Argentina shit was hitting the fan?
I feel like it may.
I think so.
Wasn't there like riots in the streets, right? Yeah. The currency was crashing, and that may have been that.
Something was going on.
Something like that.
Yeah, something was going on. So I think it may have been sympathy selling there. Maybe just a shit show in Argentina in general, not so much company specific. Yeah, sure. It could have been. Yeah.
Okay.
Either way, it's stuck. Listen, all this mess, we got to be above that before even getting interested. Like you're just stuck below overhead supply here. It's pretty nasty.
Okay, let's go with MCK next. This is McKesson. This is from. I did not write down. Oh, this might also be from. I don't know who this is from. MCK.
Yeah, I mean, this thing has just been an absolute monster for so long. Here, let's look at a monthly so you could really see this. I mean, this thing is just an absolute monster. So this is MCK. So MCK, I always like to get perspective on market cap. My suspicion is like it's 80 billion. Let's see how close I am. 59 billion. What did I say? 80 billion? All right, that wasn't too far off.
That is close, man.
That was pretty good.
You get a 25% buffer on the other side. So
all right. So that was pretty good. That was pretty good. So 60 billion, basically, medical distribution. I used to have a client back in the day that worked at McKesson. What an absolute monster this thing is. So it's really been, these Fibonacci extension levels, the market has really followed these things pretty well, really failed here, and once you get the Fibonacci levels right, you can kind of tell the rhythm of the market is really what it's all about. It's all about that rhythm, Spencer. You're a good dancer. You're the guy in the weddings. You're the dancer. Is that you? You go to a lot of weddings.
I mean, I'm at that season of life. I'm actually coming out of it now. I've only got only 4 weddings on the books the next 2 years, so I'm almost done.
Weddings Thankfully. Are fun. Weddings are Thankfully. Fun. Yeah, you're at that age. But yeah, so this thing's an absolute beast. It's down a little bit today, a little sympathy selling there. So, I mean, all in all, any weakness here down towards 360 or so seems like a good level of support, somewhere around there. Unfortunately for those looking to get up here, we're in the 430, so we're really nowhere near those levels. So longer term, this seems to be a pullback that I want to be buying as low as 360. If you start losing 4.25, 425, you start losing that to the downside, things will probably be messy longer.
All right, on we go. Gerbier asked about Teladoc, please and thank you. He said, seems like there was a lot of support around 22.
It's T-Doc, right?
Yeah.
Why you have to sigh like that?
I guess, yeah. I guess it stopped going down. I guess that's saying something.
What's your beef with Teladoc? Because you're just hating because it goes down?
I mean, kind of.
So this is the thing where you talk to the doctor, so the insurance good for the insurance companies because it's cheaper.
Yeah, it's a great idea. I mean, great idea for a business. That doesn't make it a great investment necessarily. They probably had a lot of their earnings pulled forward during COVID. So I don't know.
So, this is interesting because it's a healthcare company. It's a $4 billion quote unquote healthcare company.
Yeah, right? But it's tech. It's tech though.
But this is This is ARC overlaid to T-Doc.
Yep, it's the same.
So in case you were wondering whether this is a healthcare stock like it's labeled, or whether this is one of those high growth, low interest rate beneficiaries, if you will, this is Teladoc overlaid with ARC. So you tell me.
Yeah, I agree wholeheartedly.
Yeah. So this thing's a hot piece of garbage, as a lot of things in ARC. You've had some mean reversions, but as good as some of these mean reversions have been in these ARC stocks, T-Doc didn't get the memo that these things, that the short squeeze was on these ultra growth. So that just goes to show you just how terrible this is. So for me, I think a short on a break is probably the best bet here. Anything down under 21 and a half, you short that down to retest those former lows, right? I think that's really the trade there, down to the single digits, but only on a breakdown below those former lows. So let's call it, 21 and a half or so. If it's below 21 and a half, I think it's a short. If it's above that, kind of leave it alone. It's just not worth it. But below that for a short, I like it. Okay.
Brisa dropped us a couple symbols. Two of them I'll tell you about now because they're at all-time highs. Celsius, CELH, and CEPU markets. And I just threw them in there together because both charts look kind of the same to me in that they're at all-time highs. That's Celsius.
That's Celsius. So
yeah.
Let's just get a little love here so you can really get a good look at this base. JC likes big bases.
What's up with the y-axis? What's going on there?
The y-axis?
Oh, okay.
Because this thing got so low. This thing was in the pennies back in 2011. So, we look at log charts around here so you can really get perspective, especially in the long term. So that's what's going on here, in case you're wondering. So this is CELH, right? Do I have that right?
Yeah, you got it.
This is Celsius Holdings. So it's $14 billion. So they make drinks. That's the story. They make
supposedly the greatest energy drink since Monster. I don't know.
Well, Monster's been a big winner too. So there seems to be big money in these energy drinks. Monster is one of the greatest stocks of all time.
It is.
So this kind of just put things in perspective, and these levels are being respected. Makes sense. So this 200 level is a big one, right? 200 level is a big one. You can kind of zoom in here. Right, and there's your 200 sort of level. Anywhere around 200, right? Anywhere around that 200 level is probably trouble here, and it's flat on the day, showing relative strength. I mean, this isn't a name that I would short, but it's a name that the next extension level right around 200 is quickly approaching. It's 18 points away. Something to take note of. But this thing's an absolute beast. Absolute beast. Wow. And then there was the other one, CBOE.
Yeah, CBOE, which is also an absolute beast. Unsurprisingly, I guess the proliferation of zero-date expiration options is good for an options exchange. Who would have thought?
Can't believe it.
Can't believe it. I'm stunned.
Your fundamental analysis, Spencer, is second to none.
Spot on, as always. I know.
Second to none. I mean, just a young Warren Buffett over here, Spencer Israel. You know what I'm saying? It's a young Warren Buffett. No big deal. No big deal. So what are we working with here? A little CBOE, little options exchange. How you doing, Chicago? It's not pizza. It's in the casserole category. I will die on that hill.
I would agree. I would also die on that hill with you.
Look at that. JC and Spencer. Dying on the hill together.
ATH.
Just look at that. I mean, just an absolute beast. So if you want to get a little nasty, Spencer, we get a little nasty with some Fibonacci extension levels. Set some targets, the old fashioned way, using mathematics. Remember arithmetic?
Yeah.
What we do around here, Spencer, we do some math, and that extension level is about 182. Nice 5-year base. How you doing?
Looking good. Looking
By
juicy.
the way, I don't hate those casseroles. It's not that I dislike them. It's just not pizza.
Yep.
So
Okay.
don't call it that. It's a casserole.
Couple more from the email, and we'll go to the chat. Daniel asked about Square, Block, whatever you want to call it, the payments company, the SQ. I'm looking. Oh, look at that! Look at that on like the monthly, perfectly symmetrical chart over the last 5 years. Huh.
This is what we call the old oop-de-oop. The old oop-de-oop, Spencer.
This one, I don't know if I've ever seen a chart like this before. It's a mirror image. Yeah.
It's a oop-de-oops.
It's a giant mirror of itself. That's crazy.
No, it's funny because I'm friends with a lot of like technicians that are like, these guys are like Top Gun fighter pilots and shit like that. Like these guys are crazy. And like their math is on a whole nother level. And they'll take this and they'll slice it down the middle like this. They'll slice it down the middle and they'll do the exact mirror and they'll create targets and cycles accordingly. I'm telling you, it's insane.
Okay.
I don't necessarily do that. I'm more looking for support and resistance levels, which is kind of what I'm seeing here, right? But this thing is, you know, I mean, listen, what Spencer's talking about, how they're mirror images, like there's something to that. Like I've seen a lot of work done on that. Most likely this thing's going to break this massive lows and it's going to continue to crash, right? This thing's a hot piece of garbage, right? Hot piece of garbage. Because look, if you go ARC, what do you know? They look exactly the same. So let's clean this up a little so you guys can see what ends up happening. So this is portfolio. It's not that Square and Kathy Wood. It's just that these portfolio managers, they are allocating assets in similar type of companies and funds, right? So that's why these things look exactly the same, because they're correlated amongst the same fund managers doing the same thing. They all left the same idea dinner with the same ideas and they're buying the same stocks, right? So if it's one of those, it's kind of like Teladoc, right? Same exact situation.
Yeah. When it comes to individual stocks, almost none of them move in a vacuum. Actually, no, none of them move in a vacuum. Not almost. None of them move in a vacuum. They are moving.
But there's some of them in different cycles, you know, are really moving together. And here's just a couple of good examples of that.
Yep. Okay. What about from, again, the email? Oh, XBI. I love me a good ETF. We talked about biotech a little bit this morning and how not great it's been in the last, well, really go back, what, eight years now. But I'm always fascinated by the XBI and the performance, the divergence between that and the IBB. But let's just not look at the IBB for now. This was a question from Praveen about XBI. So what do you think?
Well, the IBB is cap weighted. Keep that in mind. The XBI is equally weighted.
That's correct.
So you're going to get a lot bigger exposure to the biggest ones in the IBB. The XBI is going to be equally weighted. So keep that in mind. And it doesn't make one better than the other. They're just different. And in some cycles, depending on the environment, one's going to outperform, and in other cycles, another one's going to outperform. It just depends. So again, one of those situations, it's not better or worse. This is different. Like steak or sushi. It's not that one's better than the other. They're just different, right?
Analogies spot on today.
They're just different. So this thing's pretty nasty, you know? I mean,
yeah,
I don't think you guys need, you don't need a chart to know that this thing's been a mess for quite some time. It continues to be, right? You have the support levels down here, BFD. And, we're stuck below this overhead supply. I mean, that's the bottom line. We're stuck below that, continues to prove it. We can start holding above 95 or so, start getting above 100. Maybe we can get up towards 130, 140. But I mean, this thing is just within healthcare. You've got other groups that are definitely doing better, and I would look elsewhere in the healthcare.
All right, last one from the email. We'll go to the chat after this. Axon, AXON. This is the old Taser. It used to be Taser. Now it's called Axon. This thing just had a huge gap up on earnings. It's holding that gap too. Nice, actually. Didn't realize I got all the way back, but yeah, just about.
Look at that. Wow. There's the chart. There it is. I got my y-axis going, You know me, Spencer. I love to pinch a good y-axis. Don't forget to pinch the y-axis. You can get a good visual as to what's happening here. I mean, look at that. Spencer, how many times since you joined this year at All Star Charts and Stock Market Media that we've talked about smiley faces and buying the smiley faces? You know why I always say that?
Yeah, but the smiley face was 3 years ago.
No, fine, but that's what I'm saying. But look at the implications of a successful smiley face breakout. You see what I'm saying? Like this is why we look for these things, like Exhibit A, right? And there's no question. I mean, this thing just continues to rock and roll. Base on base on base. And then look at this resistance level up here. We could see another breakout very easily. So this is the old taser, huh? They're making all kinds of stuff. They're technically aerospace and defense here, an industrial stock. Yep, they got the taser. They got the taser 7. They got the taser X26P, of course. How could they not? Right? Incorporated in 1993. Headquartered in Scottsdale, Arizona. Who knew? What's the market cap? Quick, don't look.
Well, knowing that it 3 billion?
15.
Oh, damn. All right.
Yep. So this is Axon, the old taser. We should put this in parentheses. AKA taser. Right?
Yep.
Like calling this thing meta. Get out of here. I guess, do we call it meta yet? I don't call it alphabet. It's still Google.
Yeah, I don't know. I tend to go both ways. So
all right. So then, if we get a breakout, I think we extend higher.
All right.
Let's call it 290, 293, 294. I'm looking at 212 here. A breakout there could take us to 293. 294. That's a nice move. So 212, that's the level. Room 212, where the players dwell.
All right. Let's go to the chat. Jared King is asking. Jared King wants to buy puts on forward with the UAW strike coming up. Jared King, if it's one thing I've learned, it's that Wall Street does not care about labor action. Wall Street could not care less about strikes, about threatened strikes, pending strikes, looming strikes. Frank, there's a double strike right now in Hollywood and Wall Street. If you ask investors why Disney's down, they would give you 20 other reasons, not before the strike, or maybe not 20, but maybe like 3. But Wall Street generally speaking, does not care about labor strife. Just to throw that out there.
I don't know what Wall Street cares about, but I'll tell you this much. They don't seem to care a lot about price. They're always focused on all sorts of other things. So my suggestion, if you're an investor and you're looking to make money, I would spend a lot of time looking at the actual prices of these assets. So you understand, whether you're putting yourself in a situation that you are likely to succeed and make money, or whether you're putting yourself in a position where you're at a disadvantage, for example. So in the case of Ford, from any sort of longer term horizon, we're still stuck below all these levels, right? All these levels, nasty resistance across the board, nasty failed breakout there, right? Just not a good situation there.
Oh, I rode that wave up to 20. That was a fun one.
Yeah, well, you had a nice little mean reversion there. Terrific. Now, bigger picture, when you zoom out, you're still stuck below these levels. So where's Ford now? Let's see. What's the market cap of Ford without looking? What do you think it is?
100.
Half that.
Damn. All right.
Ford, based out of Dearborn, Michigan. I thought they were in Detroit. What happened to the D?
No, they're in Dearborn. Dearborn is
how far is that from Detroit?
It's the next town. It's like one town over.
Oh, so it's the same shit. Okay.
Yeah.
Okay. So stuck below this. So I'm thinking $20 is probably a good level. It's probably a little conservative. You might get even right around 19 and a half or so, but that 20 level, you got to get above that. If you're below all this overhead supply, Spencer, owning stock stuck below overhead supply is no way to go through life. There's no way to do it.
It does make your life more difficult. I can attest to it personally.
Come on. You don't want, who needs that?
No. Yeah. I mean, I agree with you. Okay. Good one here from Kevin Hu. He's asking for a ratio chart of GBTC versus Bitcoin. And he wants to know, what does it mean if GBTC starts to outperform Bitcoin?
So what you're talking about is something different. What you're talking about here is you're talking about the discount versus the premium.
I don't know if that's what he's talking about.
My suspicion is that's exactly what he's talking about, because what ends up happening is that, Spencer, is that in bear markets for Bitcoin, the grayscale tends to trade at a deep discount to Bitcoin. In bull markets, because there's so much demand, it tends to trade at a deep premium to Bitcoin. So this is what we have here. So this is GBTC.
So bottom line is the performance tracks. It's not a question of performance. It's a question of the discount or premium of a price of one GBTC versus the underlying asset, which is Bitcoin. But the price is still trend. So, they still trend directionally correct.
Who is it that's got it? There's a good Bitcoin to GBTC discount. There's a good way. Oh, it's chart. Here we go. Y chart shows it. Here we go. I'll show you guys.
Oh, I've seen that chart. Yeah.
So Y chart shows it. So here I'm looking at the GBTC. How do I go full time? Here, I'll show you guys. So if you go to Y charts, you can see this is the discount.
It's coming in, baby. It's coming in.
So you see how all year the discount has been steepening, or I should say there's been less and less of a discount as the year has gone on. Well, that's because Bitcoin has done well, right? So there's more of a demand. So it's still a 24% discount, but far from a 50%, which is where we were at the end of last year, which is evidence in and of itself to sentiment, right? Sentiment was just so down in the dumps that this thing was selling such a deep discount, and now that it's half that. So, it's just the fact that it's been coming back is just further evidence that the price of Bitcoin has been going up all year, right? Is really what that means. So I hope that helps.
Okay, we start a couple minutes late, so we'll do like one or two more quick. Joe is asking about ITW, JC.
So ITW, not one I have to know off the top of my head. Oh yeah. Illinois Tool Works, of course. So this is an industrial stock. But of course. What's the market cap on ITW? What do you think?
I don't want to venture a guess. I couldn't tell you. 10 billion.
45 is my guess. Let's see.
Right.
45 is my guess. I like how we play these little games. ITW. Let's see. 45 is my guess. Specialty Industrial Machinery, 72. Big company. How about that? Big,
way off.
Big
I had no idea.
Way off. So this one, industrial, big machinery. What state do you think they're based out of?
Illinois Tool Works. What state are they based out of? Is that what you just said?
Trick question. See what I did there? Spencer picked up on that quickly. Glenview, Illinois. Harlem Avenue. Okay, who knew there was a Harlem Avenue in Illinois? Look at that. Well, I mean, talk about a stock that really respects its Fibonacci extension levels, huh? Look at that. I mean, does it get any cleaner than this? I mean, how much respect Illinois Tool Works gives to a one Leonardo Bartholomew Fibonacci. Look at that.
Wow, that's pretty good. That's pretty good, actually.
Come on, my man figured this out how long ago? 1,000 years ago? How old? I mean, shout out to the Italians. Wow. Even though the truth is, Pingala in India actually discovered this like maybe 600 years earlier or something like that, using a different math problem. They came to the same conclusion different ways. Wow, it wasn't like big. It wasn't like big. Yeah. Big Al didn't like steal this from Pingala. Like he figured it out differently.
All right. That's nice. That looks clean. So wait, just to recap, where'd you draw that from again?
High to low.
Okay. High to low. There you go.
Yeah.
Wow. Pretty crazy stuff there. All right.
Just every single time. I mean, just to a T. I mean, this is why we look at these levels. I mean, Spencer, how many charts of ours have you looked at over the years? I mean, there's a reason why we put these levels. And as you can see here, I'm charting these live. So it's not like I'm, constructing these. This is the market really, really respecting these. So 263, clearly a big level, right? That's the big one. The market continues to prove that it is. So I would keep a very close eye there. 263, a breakout above that could take you above 400, right? That's what that looks like to me.
Wow.
But below 263, there's trouble as the market continues to prove time and time again.
All right, I think that's a great place for us to wrap it up here. So this has been CRL Chart Request Live. The show airs every Tuesday and Thursday, 1:00 p.m. Eastern time here on this channel. Thursday, you'll have Straza and one Patrick Donawilla with you as your shepherds through the Valley of Charts. Don't forget to drop us a like, hit the thumbs up. Hey, hit subscribe. If you're watching us on stockmarketmedia.com, that'd be great. If you want to hop on over to YouTube and like us there, we'd appreciate that as well. If you're watching us on Twitter, do the same thing. Thanks to JC. Thanks for all the questions, comments, concerns.
And then let us know which one you like better: Tuesdays with Spencer and JC, or Thursdays with Pat and Straza.
Email us to get ahead of the game here. Email us at the bottom of the screen. It says it. Questions at stockmarketmedia.com. Everyone have a great rest of your day. See you guys tomorrow.
Adios.